While the Fed and central banks rush to inflate fiat currencies by printing trillions of dollars, we're witnessing Bitcoin deflate and cut its supply. In this video, I'm going to explain what that means. I'm going to show you how we should view this contrast between inflation and deflation. I'm even going to show you where Bitcoin's price is expected to be pretty soon. So stay tuned. All right, welcome back. If you're new to the channel, my name is Mark Moss. I like to talk about making money, investing money, having overall success. If you like those topics, which I'm sure you do, please click the like button. It helps more people see the videos. Click subscribe and hit the bell notification if you are not already subscribed. And today we are going to talk about Bitcoin. Now, I started this channel talking about Bitcoin. It's pretty much all I talked about for a really long time. And if you go back to my video feed, you'll see dozens and dozens and dozens of video about Bitcoin, which I believe is the most explosive asset. It's the single best risk versus reward asset that we have today. And I'm going to explain that to you a little bit. Now, Bitcoin's very difficult to understand. And so that's why I have so many different videos. And each video kind of discusses a little bit of a different topic regarding Bitcoin. It's super hard to understand because it's so many things. Now, anytime we have a new technology, we try to explain it by saying it's like something. So it's kind of like money. It's kind of like a network. It's kind of like, right? We say all these things and it is kind of like that, but it's so much more. So it's so many things. And like I said, so if you watch through the videos, you'll see all the different things that Bitcoin is. However, it is many things, but one thing we do know that it is for sure is the most secure computer network in the world that we've ever seen, period. So we do know that. So what I mean by that is that obviously as the world has gone to the internet, everything's online, we see computer hacking becoming more and more and more prevalent. We've seen, Target was hacked, Experian was hacked, the CIA was hacked, even the NSA was hacked. And when they hacked the NSA, they stole the NSA's hacking software. All these networks are centrally managed, centrally controlled, centrally protected. Imagine the CIA, the NSA, the best computer security that you could ever imagine, network security you could imagine, but yet they were hacked. Bitcoin, on the other hand, is not controlled. It's completely open source. Anybody can have access to the code, to view the code. Anybody can have access to build on top of the code. Nobody's there protecting it. No security teams. There's $100, $200 billion of value sitting there open, and it's never been hacked. That's how secure it is. Now, like I said, it's a lot of different things. And a lot of people think, oh, there's thousands of them. There's thousands of these cryptocurrencies. And it's not about Bitcoin. It's about blockchain. Well, again, I'm not going to go into every one of these nuances on this video, but it's not just about blockchain. As a matter of fact, blockchain is only one of the elements that makes Bitcoin what it is. All right. Now, some people think it's like, oh, it's just some like cloud ledger where like all the transactions are aggregated and they're settled. And that's not true either. All right. Now with Bitcoin, there's no central cloud. There's no central database. There's no central source of truth, right? There's no public blockchain. Instead, each individual participant on the network has its own version. It's permissionless. If you want to join a network, whether that's Amazon Web Services or Facebook, you have to get permission to join. The Bitcoin network is permissionless. Anybody can get a computer, hook onto the network, and they can start producing blocks, working on the network. The network is permissionless. And so there's no central source. Everybody who connects to the network controls their own code base. So each participant has its own version, and nobody trusts each other, right? So what we say in Bitcoin is don't trust. We validate. So none of these individual participants trust each other. Instead, they all validate. And so all the participants, they have to look at all the code compared to each other, and they find out if there's consensus, meaning if there's more than 51% agree. All right, now these are the miners. And I'm breaking this down so you can understand what's going on. So these miners, they're high-powered computers that are specially built to process transactions on the Bitcoin network. And every 10 minutes, another block is produced. So think of it like a blockchain. It's block by block by block by block, and it continues to get added, another block with data, more data every 10 minutes. That's how it works. That's why it's a blockchain. And so they're producing these transactions to reach this consensus across the network. All right, I don't want to go super deep into this. That's not the point of this video, but I wanted you to understand that's how that works. So all these individual participants working on the blockchain to process transactions add a new block every 10 minutes. And because each one of those transactions, every one of those blocks within one integrated function, we see the miners, they validate the past history, they clear all new transactions, and then they get paid for the security they provide on this trustless basis. All right, they're not trusting anyone to pay them. They know that the network is trustless. And so if they do these things, which are, like I said, to validate the past history, process transactions, they trust they're going to get paid for the security they've provided. All right. Now, the integrity of Bitcoin is based off of a fixed supply. All right, so we know there will never be more than 21 million, and we know that every block that gets processed, a certain amount of Bitcoin gets produced. Now I'm going to talk about that in a minute. But we have to understand that this is all embedded in its security function. So I'm talking about Bitcoin being the most secure computer network in the world, and this is how it works. All these individual participants all working together in a trustless fashion, all to secure the network, right? And it's because of this network being all independent, and they're all independently validating the work of each other. It allows this consensus to be reached on a decentralized basis. So we don't need to have that cloud computer where that controls it. It's all these individual people can work independently, decentralized, and they can all come to this consensus. And so if a miner, if one of these computers, one of these actors completes valid work, they get paid. If they don't, if they try to act maliciously, then they don't. All right. And the way they get paid is with this block reward. So like I said, every 10 minutes, a new block is added. And when this new block is added, it unlocks new Bitcoins for that work. And so all the miners, all these participants that are helping to process the security, process the transactions, to process these blocks, when the new Bitcoins are unlocked, they get spread out to the rest of the network. So if you're participating in that, you get your own share of that reward that's released. Now, currently, like I said, the amount of Bitcoin is fixed. There will never be more than 21 million Bitcoin. But we started with 0 and we're working our way up to 21 million. So basically, every 10 minutes, these new Bitcoins are released. And every time new Bitcoin is released, we call that inflation. If you've been on the channel for a while, you're no stranger to that word inflation. We talk about it a lot. Think of it like a balloon. It inflates the supply, right? So there's this much Bitcoin, but every time new Bitcoin are produced, it inflates the supply of Bitcoin. All right. Now, the amount of inflation is preset, meaning from the day Bitcoin was released back in 2009 through now, all the way through the future, we already know what the inflation is going to be. And so it's cutting in half every 4 years. So when it first started, it was 50 Bitcoin were released every block. In 2012, that was the first halving event, which is what we're talking about right now. That means the new inflation was cut in half and it went down to 25 Bitcoin every 10 minutes. In 2016, we had another halving event and it dropped it down to 12.5 Bitcoin every 10 minutes, which is where we've been up until now. And now we are celebrating the halving event again, the 2020 halving, and the new inflation is cut from 12.5 down to 6.25 every 10 minutes. Now, this process of halving every 4 years will continue to go on and on and on until about the year 2140. It's about 120 years from now. And what's super interesting about this happening right now is that, well, Bitcoin was created in 2009 at the bottom of the 2008 great financial crash. It was created as a response. So in 2008, the bankers crashed the market and then got this massive bailout from the government. And when they got the bailout from the government, it created billions, trillions of dollars, inflating the money supply, making it worth less and less. And Bitcoin was created as a direct response to that. And instead of being inflationary, it was deflationary. And what's important is that we are now in another halving event, and we're in this pandemic at the same time. We have this sickness going around right now that's crushed the entire market, and we're seeing the exact same thing happen that we saw in 2008, which is the Fed and the central banks are printing trillions of dollars, literally trillions of dollars, and they're inflating the currency, the fiat currency, to almost no end. They've used the word to infinity. They use the word unlimited. And so at the same time, we're watching the Fed say unlimited, infinity money printing. At the same time, we're watching Bitcoin's inflation fall. So we're seeing the opposite. Fiat is going up, more is being printed, the value is going down, but Bitcoin is falling at the same time. So it's interesting to see this happening at the same time. And just like creating more dollars makes all the existing dollars worth less and less, right? We know that. We've seen the US dollar lose over 95% of its purchasing power in about the last 100 years. And the Fed just keeps printing more and more and more. Again, if you've been on the channel for a while, you know I talk about inflation a lot. And so an easy way to look at this is you hear like in 1970, it was $30,000, but in today's dollars, that's more like $150,000. What does that mean in today's dollars? Shouldn't a dollar be a dollar be a dollar? Like an ounce of gold is an ounce of gold? It's not, because they're always printing more dollars. And as they do, the dollar value goes down and down and down. So it's not that prices have gotten more expensive. It's that it takes more dollars to buy them. And so we've seen the dollar, the purchasing value of the dollar go down and down and down over the last 100 years. It's only accelerating. I mean, they've printed more money in the last couple of weeks than they have in the last, who knows how long, in decades, right? And so at the same time that's happening, we're seeing deflation happen. So as Bitcoin now is removing the supply, removing the inflation or causing deflation. So right now we're adding 12 per block every 10 minutes. We're going to go down to 6.25. So it should make it really, really interesting to watch these two contrast in real time. The fiat currency going up, inflating, Bitcoin deflating, all right? Now, what does that mean? Well, just like with fiat dollars, the more they produce, the less they're worth. Well, the opposite should be true. So with Bitcoin, the less they produce, the more they should be worth, right? It's the opposite. Now, time is going to tell. We don't have a crystal ball. If we did, it sure would make this a lot easier, but we don't. But we do have some models that we can take a look at. So the first thing that you have to consider, and I always try to bring this all the way back down to the most basic, right? The first thing you have to consider is that everything moves on supply and demand, right? Supply and demand. Supply and demand. No government, no central bank, no Fed. They try to manipulate the markets, but the markets are always going to be based off of scarcity, supply and demand. When there's less supply but there's more demand, the prices are going to go up. When there's a ton of supply and nobody wants it, the prices are going to go down. That's just the way it works. No amount of central bank manipulation can replace that, can get over that, right? All right, so currently the market's absorbing about 1,800 Bitcoins per day. So currently the price of Bitcoin, it's volatile, it's going up and down, but I mean, it's kind of staying stable. And you have to imagine that 1,800 new Bitcoins are being produced every day and dumping onto the market. It's about $16 million, roughly, depending on the price. So about $16 million, 1,800 Bitcoins are being newly created, dumped into the market every day, and the market's just absorbing it. Supply and demand. There is enough demand to absorb the supply, and it's holding the price constant, right? So now imagine cutting the supply in half. So the demand is already here. It's matching, the supply and demand is matching. If the demand stays here and the supply cuts in half, what should happen? The price should go up. So we're going to go from 1,800 Bitcoins a day down to about 900 Bitcoins a day, right? So it's going to be very interesting to see this happens. Now, how high can it go? What do we expect? Now, I've done several videos on this. I recently did one a little while back. I'm going to link to it up here. Talked about how Bitcoin could easily get to $100,000. I know people think that's crazy talk. I've also referenced models by Plan B. I'm going to link to it in the description down below. He's done amazing work on what's called the stock to flow model. Now, stock to flow is the stock, the amount of existing supply, the amount of stock that we have available versus the flow, the new incoming flow. It's inflation. Stock to flow, that's our inflation schedule. He's done amazing work on this, and he's basically compared the stock to flow of Bitcoin to other hard assets. Hard assets meaning assets that can't be manipulated, can't be created like fiat currency. So we're talking about mainly gold and silver. He's looked at it to other metals. He's looked at it to jewels and things like that. But really it works with gold and silver. And basically, as the flow decreases, the inflation, the stock becomes more valuable. And he's shown it over and over and over again. Now, based off of this research, it shows the price of Bitcoin kind of moving up and down. No markets go up in a straight line. No markets go down in a straight line. They're always going to stair step both ways. But based off of this research, he shows that new all-time high happens about 1.5 years after the halving event. And again, the halving event is happening right now. So based off of his research, which has held true for over a decade now, doesn't mean it will in the future, but based off of that research, we should expect to see a new all-time high within the next year and a half after this halving event, which means that by next year in 2021, he expects the price of Bitcoin to be over $288,000 per Bitcoin, almost $300,000 per Bitcoin. Now, will this happen? No one knows. We don't have a crystal ball. If we did, it would make things so much easier, but we don't. So instead, we have to look at data, we have to look at models and things like that. Now, everybody has an opinion as of this, and I'm sure I'm going to get a ton of your opinions down in the comments below. I'm looking forward to it. But I like to think of things as probabilities, all right? So I'm not trying to predict the future. I'm not trying to guess the future. I think about probabilities. Is it probable? Could it happen? If so, what are the chances of that? How probable is it, right? So that's how we have to think about things as investors. So I think it's possible. I think it's probable that that could happen. That's why I think Bitcoin is the best risk-adjusted bet that we have today. If it can go from 10,000 to 300,000, that's a massive return. So we have a 10x, 20x, 100x on the upside. We have a 1x on the downside, right? That's the type of risk to reward that we like. The real investors, the professional investors, look for something called asymmetric returns. Returns that have way more upside with limited downside. What investors that aren't so smart do is they do the opposite. So I'm betting 100% to make 5%, to make 10%. What real investors, what professional investors do is they invest 5%, they risk 5% to make 100%. It's way better that way. And that's what Bitcoin gives us today. Now, is it guaranteed? Of course not. Nothing in life is guaranteed. Could it go to zero? It could. There's things that could cause it to go to zero. But could it go to 100,000? It definitely could. And so there's a probability of that happening. You have to decide what the probability percentage is, and then you can decide how much you want to allocate to it. But does it make sense to have at least a little bit of exposure to it? I would say definitely. I think we're already seeing like Paul Tudor Jones, one of the biggest hedge fund managers out there. He said he's allocated 2% of his portfolio to Bitcoin, to the exposure of Bitcoin's price. And so maybe you take 1% exposure. Maybe you take 2% exposure like him. I know people who have 50% exposure, and maybe that's too crazy. Definitely, I wouldn't say go all in at all because it's not guaranteed. Could it go to zero? Yes, you could lose 100% of your money, but you could make 1,000%. And those are the types of risk rewards that we're looking at. And like the Bitcoin creator Satoshi Nakamoto said when he first released it, quote, "It might make sense just to get some in case it catches on." All right, let me know what you think about this. Leave me the comments down below. I can't wait to see what you guys are going to say about this. Do you think Plan B's model it's possible? Do you think it's possible to see 100,000, 200,000? Or are we all crazy? But even if we're crazy, wouldn't it be worth taking just a little bit of a chance? Leave me a comment down below. Let me know what you're going to do. Like always, give me a thumbs up on this video if you like it. If you don't like the video, that's okay. Give me a thumbs down either way, but let me know. And that's all I got for you. To your success. I'm out.